Hey, it's Clay, and this will be a video chart on ticker symbol NSPR. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like to do this time frame. I think it's a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I don't mean to state the obvious or rub salt in one's wounds, but yeah, pretty rough day today. You know, the first portion of the day, price got absolutely hammered, but this is what actually is creating a pretty interesting setup. And, you know, kind of to set things up, like I said, not to rub salt in the wounds, but things got really bad. And then all of a sudden, late morning, and essentially the rest of the day, the price went sideways. And then the final kind of little interesting dynamic here is check out the volume for the final 30 minutes of the day. And then you look at the candle that formed, nothing huge, but yeah, big volume, and then a little miniature green candle after a lot of sideways price action. Now, don't get me wrong, and I really wish I could say trading was this easy. Just because all these dynamics have happened, I'm not saying that this is for sure a bottom and that the price is for sure, bouncing next week. There's no such thing as a for sure in the market. Now, would it be shocking to see a bounce? No, that would not be shocking at all. However, again, I don't want to come across like I'm trying to, make some sort of guarantee or anything like that. So if this is going to bounce, well, then the first step is this needs to be the bottom. And what do I mean by that? Well, the price has got to just stop going down. And that's where 22 cents comes into play. Because, if 22 cents can hold, then that by definition implies that this is some sort of bottom that continues to at least go sideways. But in the event the price does bounce, let's talk about a couple areas of resistance. First key area of resistance on any sort of bounce, going to be right there at 25 cents, which I guess is exactly where the price stopped today. So if any sort of, decent sized momentum bounce is going to get started next week, 25 cents is public enemy number one. If the price can get above there, then 28 cents will be that next key level, and I'll just leave it at those two. But any way you look at it, very interesting setup. And, these are definitely ones that shouldn't be touched if you're not good at risk, managing risk and analyzing risk and stuff like that. But yeah, if you've traded long enough, I know that stocks that get beat up in a hurry like this, especially when they're in the penny stock range, can produce some pretty interesting bounces. So we'll see if we get something like that or not next week. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.